Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to learn how to solve hire purchase problem sum in which they are given you to calculate depreciation under reducing balance method. The entire sum will remain the same only. The only one new factor will come in the space is where the depreciation, rather than asking us to solve as per straight line method, they will ask you to solve as per reducing balance method. So let us see how to solve that one sum. Tone Up Gym purchased a machine. So on 1st April, you purchase a machine from Neil on hire purchase basis. The cash price of the machine was 2 lakhs. The payment was to be made rupees 1 lakh on the date of agreement, and the balance is two installment of 50,000 plus interest. This statement means a lot. At 12% per annum, payable on 31st March each year. The first installment was made on 31st March 2014. Purchased in April, so it is 13-14 first year. Prepare machinery and Neil account in the books of Tone Up Gym for the financial year 2013-14 and 14-15. So 2 years ka we'll have to prepare ledger account, assuming that the accounts are closed every year, and 30 and depreciation is going to be charged at 20% on reducing balance method. Okay. So now let us see how to solve the sum. Now the very first thing we'll do is we'll make a table of calculation of interest, which I've already done. So I'm going to explain you all basically how to solve that particular interest calculation table. Okay. So the heading is interest calculation. We have particulars. 1st April 2013, okay, 31st March 2014 and 31st March 2015, because 2 year ka data is given. Opening stock, down payment, installment, interest, cash price, and closing balance. This is normal. Now, the cash price of the machine, or the opening stock of the machine was 2 lakhs. So I've written here 2 lakhs. In the first year, we made a down payment of 1 lakh. So 1 lakh. So first, on the day when you purchase and you make down payment, there is never an interest. So cash price is 1 lakh. So 2 lakh minus 1 lakh. The opening minus cash price is 1 lakh. That's my first closing balance. Now be careful here, okay? First year ka closing will become next year, in the next one ka opening. So opening is 1 lakh. Now, whenever they give you that some balances is made in installment plus interest. Remember, whenever that thing is get with plus interest, always remember whatever amount, okay, they have given us of the installment, that will be nothing but my cash price. Okay, and when I add plus interest, that will be my installment value. So here they told you, yeah, two installment plus interest. Since there is plus interest, this 50,000 will become my cash price for 2 years. So one is 50,000 here and one is 31st March 2015, 14 and 15. Okay, now come back to the year 14. Opening was 1 lakh. On 1 lakh, we'll have to take interest of 12%, which comes to 12,000. Okay, now cash price plus interest, when you add up, the total installment that you're going to pay will be 62,000, which includes your cash price of 50,000 and interest of 12,000. Okay, lastly, opening minus cash price 1 lakh minus 50 will give you 50,000. Again, closing will become next year's opening. Again, 50,000 pay we have to take interest of 12%, which comes to 6,000. When you add these two, it becomes 56,000. That's the installment value, that is interest plus cash price. Okay, now lastly, opening minus cash will become 0, that is nil. So if you get the final value as nil, meaning your solution for interest calculation is that. So which are the two interests in this? One is 12,000 and the other one is 6,000. For the first year 12, second year 6,000. That is the very first thing that was supposed to be found. Now next they have asked you to now prepare the actual account, that is machinery account. Now before starting machinery account, in machinery we have to find something called a depreciation, and they have told you use 20% depreciation rate at reducing balance method. So very simple. Reducing balance means whatever balance you get from that, you have to remove your depreciation. So for example, on 1st April 13 you bought a machine for 2 lakhs. So on 31st March 14, on 2 lakhs you will remove 20%, which comes to 40,000. That's your dep amount. So 2 lakh minus 40,000 is 1 lakh 60. Now that's your balance. Now under reducing balance method, whatever balance you get of the first year, on that you'll have to remove depreciation and go ahead. Okay, now since in this video I only asked us to prepare for 2 years. Okay, so my depreciation account For the next year will be on 1,60,000. So on 1,60,000, I will remove 20% and I get as 32,000. When you subtract, I get the value as 1,28,000. That's like a calculation of depreciation. Okay. Now, how to prepare machinery account? Very simple. Date particular rupees, date particular rupees. In the first year, always remember the moment you buy a machine or any asset, it will always be to your hire purchase account. So on first table 13 to Neil account because you're purchasing it from Neil, amount is 2 lakhs. Okay, now very simple. We come to the next part, that is on 31st March 2014, the last day of the year. By depreciation, first year ka dep is 40,000. To we took it 40. We tally, we get the balance as 1,60,000. Last year ka balance will become this year ka opening balance 1,60,000. Again, same thing. You have to replicate. By 31st March 15, we have by depreciation. Our second dep was 32,000, so we have taken it as 32,000. Tally it, whatever answer you get will be your balance. So your balance is 1,28,000 rupees. Okay, so this is how you like to solve machinery account. Secondly, they ask you to find Neil. Neil is a higher purchaser. So a higher purchaser के लिए I need down payment amount, installment amounts, and interest. So what we do here, I'll just show you that table what we already created before. Now from there, very simple. Do the heading Neil account, date particular rupees, date particular rupees. Always go in this order. First, on 1st April, you bought a machinery, so buy machine 2 lakhs. On the same day, you made the first down payment to bank 1 lakh. Okay. Now 31st March appeared, so you have a charge with an interest. The first interest was 12,000. We charged it 12,000. On the same date, you made an installment, a first installment of 62,000. So on 31st March 14 to bank 62,000 first installment. That's it. So you bought a machine, there was an interest charge, you made the down payment, there was an installment. Four things. Once that is done, we tally, we will get our balance. So balance came to 50,000. Last year का balance will become this year का opening balance. Okay, again on 31st March, there was a down payment of 56,000 and the interest charge was 6,000. So buy interest to bank tally, and this since this was the last year, they only asked you to find for 2 years. So your account got tallied 56,000 on either side. Okay, so this is how you had to solve the sum based on higher purchase where there was written down value method or reducing balance method was asked. Okay.